Welcome to the Bar Exam Toolbox podcast. Today we are walking through a UBE Secured Transactions essay question. Your Bar Exam Toolbox hosts are Alison Monahan and Lee Burgess. That's me. We're here to demystify the bar exam experience so you can study effectively, stay sane, and hopefully pass and move on with your life. We're the co-creators of the Law School Toolbox, the Bar Exam Toolbox, and the career-related website Career Dicta. Alison also runs the Girls Guide to Law School. If you enjoy the show, please leave a review on your favorite listening app and check out our sister podcast, the Law School Toolbox podcast. If you have any questions, don't hesitate to reach out to us. You can reach us via the contact form on barexamtoolbox.com, and we'd love to hear from you. And with that, let's get started. Welcome back. Today we are walking through a UBE Secured Transactions question. This is part of our series of podcasts talking about how to approach questions on the UBE. Today we're dealing with how to do your analysis. And don't forget to subscribe to our podcast so you don't miss any upcoming essay discussions. So why is analysis so important to bar essays? Well, analysis is where the majority of the points come from. Analysis is where you show that you can think like a lawyer. Remember, anyone can memorize facts and law, and anyone can talk about what happened in a fact pattern, but only lawyers can take those facts and apply it to the law to say what the outcomes should be. So this is really what you need to show the bar examiners to make sure that you pass the exam. Now, before we walk through today's question, we need to do a quick review of the law you'll want to know for this question. Because this is a secured transaction question, we are looking at the UCC Section 9 for all of our law. So, UCC Section 9 102A2 defines account as a right to payment of a monetary obligation. UCC 9 109A3 states that a sale of accounts is governed by the UCC Article 9. UCC 9203B states that a security interest is enforceable against the debtor and third parties with respect to collateral if, number 1, value has been given, number 2, the debtor has rights in the collateral, and number 3, the debtor authenticated by signing or the electronic equivalent a security agreement containing a description of the collateral. According to UCC 9308 to 9310, a properly completed financing statement must be filed with respect to the transaction in order to perfect the secured party's interest. The secured party is the buyer or the lender. UCC 9318B states that when a debtor has sold an account, he still holds rights to that account as long as the buyer's security interest is unperfected. According to UCC 9322A2, a perfectly secured interest has priority over a conflicting, unperfected security interest. UCC 9102A3 defines an account debtor as a person obligated on an account. And finally, under UCC 9406A, an account debtor with respect to assigned accounts may discharge its obligation by paying the assignor only until the account debtor receives authenticated notice of the assignment to the assignee. Notice that is actually signed is what you're looking for as authenticated notice. The account debtor may request reasonable proof of the assignment, but notice can come from either the assignor or the assignee. All right, well, that was a lot of dense law, so let's move on to reading the bar exam question. This is a question from the July 2017 UBE. We will link to a webpage in the show notes where you can find this question. Here we go. A garment manufacturer sells clothing to retail stores on credit terms pursuant to which the retail stores have 180 days after the delivery of the clothing to pay the purchase price. Not surprisingly, the manufacturer often has cash flow problems. On February 1st, the manufacturer entered into a transaction with a finance company, pursuant to which the manufacturer sold to the finance company all of the manufacturer's outstanding rights to be paid by retail stores for clothing. The transaction was memorialized in a signed writing that described in detail the payment rights that were being sold. The finance company paid the manufacturer the agreed price for these rights that day and did not file a financing statement. On March 15th, the manufacturer borrowed money from a bank. Pursuant to the terms of the loan agreement, which was signed by both parties, the manufacturer granted the bank a security interest in all the manufacturer's present and future accounts to secure the manufacturer's obligation to repay the loan. On the same day, the bank filed a properly completed financing statement in the appropriate filing office. The financing statement listed the manufacturer as debtor and the bank as secured party. The collateral was indicated as, quote, all of the manufacturer's present and future accounts. There are no other filed financing statements that list the manufacturer as debtor. On May 25th, the manufacturer defaulted on its repayment obligation to the bank. Shortly thereafter, the bank signed letters to each of the retail stores to which the manufacturer sold clothing on credit. The letters instructed each retail store to pay to the bank any amounts that the store owed to the manufacturer for clothing purchased on credit. The letter explained that the manufacturer had defaulted on its obligation to the bank and that the bank was exercising its right to a secured party, exercising its rights as a secured party. The finance company recently learned about the bank's actions. The finance company informed the bank that the finance company had purchased some of the rights to the payment being claimed by the bank. The finance company demanded that the bank cease its efforts to collect on those rights to payment. Meanwhile, some of the retail stores responded to the bank's letters by refusing to pay the bank. These stores contended that they have no obligations to the bank and that payment to the manufacturer will discharge their repayment obligations. So number one, as between the bank and the finance company, which, if either, has a superior right to the claims against the retail stores for the money the retail stores owe the manufacturer for clothing they bought on credit before February 1st? Explain. Number two, are the retail stores correct that they have no obligations to pay the bank and that paying the manufacturer will discharge their payment obligations? Explain. All right, so there you go. That's a lot of facts in that fact pattern. And if you have not studied secure transactions, this might all sound gibberish to you. So this is a really good example of why you need to study this material, because most of us did not take a class in secure transactions in law school. If you were getting this question on an exam or doing it as a practice question, the first thing you want to do is mark up your exam paper to assess what is legally significant about each fact in the fact pattern. Remember that facts are where you get the bulk of your analysis, so you need to make sure that you examine these facts carefully. So let's go through the facts of the question together. A garment manufacturer sells clothing to retail stores on credit terms, pursuant to which the retail stores have 180 days after delivery of the clothing to pay the purchase price. This should make you think about an account is a right to payment of a monetary obligation. Not surprisingly, the manufacturer often has cash flow problems. This fact is mostly relevant to the story. This is why the manufacturer is going to need to borrow money. On February 1st, the manufacturer entered into a transaction with a finance company, pursuant to which the manufacturer sold the finance company all of the manufacturer's outstanding rights to be paid by retail stores for clothing. Now, under the UCC, the sold accounts are, quote, collateral. The manufacturer is now the, quote, debtor, and the finance company is now, quote, the secured party. The second requirement for an enforceable security interest is that the debtor has rights in the collateral, and the collateral is described as the manufacturer's outstanding rights. Also, when dates are given, take note of the date in case order of events becomes relevant. I always circle dates and write them on my scratch paper to make sure I know why they included them. The next fact is that the transaction was memorialized in a signed writing that described in detail the payment rights that were being sold. This relates to the third requirement for an enforceable security interest because the debtor has signed a writing that memorialized the transaction. The finance company paid the manufacturer the agreed price for these rights that day. This sentence has two facts, so we're going to separate them. The first requirement for an enforceable security interest is that the value has been given, but then the facts continue that it did not file a financing statement. And we know according to 9308 and 9310, a secured party needs to file a financing statement in order to perfect its interest. On March 15th, the manufacturer borrowed money from a bank. Please note the date here. This is after the sale to the financing company. Also, the manufacturer borrowed money, which is, quote, value given, for purposes of creating an enforceable security interest. Pursuant to the terms of the loan agreement, which was signed by both parties, it's important to note that it was signed by both parties. That means that the third requirement of an enforceable security interest is satisfied. The next fact is that the manufacturer granted the bank a security interest in all of the manufacturer's, quote, present and future accounts to secure the manufacturer's obligation to repay the loan. An account is a right to payment of a monetary obligation. Under 9(3)18b, manufacturer still has a right to the accounts sold to the financing company because that interest is unperfected. So the second requirement for an enforceable security interest is present. On the same day, the bank filed a properly completed financing statement in the appropriate filing office. The financing statement listed the manufacturer as debtor and the bank as a secured party. The collateral was indicated as all of the manufacturer's present and future accounts. Now we know under 9(3)08 and 9(3)10, this is what was necessary to perfect the bank's security interest in the accounts. There are no other filed financing statements that list the manufacturer as debtor. This fact means that there were no other perfected interests in the accounts. On May 25th, the manufacturer defaulted on its repayment obligation to the bank. This is what will let the bank go after the collateral. Shortly thereafter, the bank sent signed letters to each of the retail stores to which the manufacturer sold clothing on credit. The letters instructed each retail store to pay the bank any amounts that the store owed to the manufacturer for clothing purchased on credit. The letter explained that the manufacturer had defaulted on its obligation to the bank, and the bank was exercising its rights as a secured party. Because the letter was signed, it was an, quote, authenticated notice of the assignment to the account debtors. The next fact is the finance company recently learned about the bank's actions. The finance company informed the bank that the finance company had purchased some of the rights to payment being claimed by the bank. The finance company demanded that the bank cease its efforts to collect on those rights to payment. So this is where the first question comes in. Whose security interest takes priority? And then lastly, meanwhile, some of the retail stores responded to the bank's letters by refusing to pay the bank. These stores contend that they have no obligations to pay the bank and that payment to the manufacturer will discharge their payment obligations. So note that this does not indicate that the retail stores have requested reasonable proof of the assignment. So, how do you use these marked up facts to improve your analysis? Well, we've got to look at actually how to answer this question. We've got to start any outline by breaking the paper into a section for each question. So number 1, the question is, as between the bank and the finance company, which, if either, has a superior right to the claims against the retail stores for the money the retail stores owe the manufacturer for clothing they bought on store credit before February 1st? And number 2, are the retail stores correct that they have no obligations to the bank and that paying the manufacturer will discharge their payment obligations? So you would take your scratch paper, break it into these 2 pieces, and start inserting the law and the issues that we have reviewed so far and trying to group them together in section 1 and section 2. And remember, when you're doing analysis, you're linking the rules to the facts. So you want to make sure that you have in your IRAC not only an issue, which can be done by a header or an issue statement, but then you want to have a clean rule statement that will come from the UCC typically. And then you want to apply the laws to those facts. And you want to make sure that in your analysis, you use the word because it makes it clear that you are linking analysis and facts. If you don't see the word because in a lot of your analysis paragraphs, it's likely that you are missing out on points. It might not sound as beautiful as some of your other writing, but remember that they're reading so carefully that using easy linking words like because just makes your answer easier for them to read. All right, so let's dive in to how we would answer question 1. So to answer this question, you can break your analysis into 3 parts. First, analyze what kind of interest the finance company has in the accounts. And second, analyze what kind of interest the bank has in its accounts. Third, then analyze which interest is superior. So our first issue is what kind of interest does the finance company have in the accounts? Our rule is a security interest is enforceable against the debtor and third parties with respect to collateral if value has been given, the debtor has rights to the collateral, and the debtor authenticated a security agreement containing a description of the collateral. So you might want to number those in your rule statement as well. Now your analysis is the finance company paid the manufacturer for the accounts, which means value was given. The manufacturer transferred its outstanding rights to be paid, which means that it had rights in the collateral. The transaction was memorialized in a signed writing that describes the collateral in detail. So the finance company has an enforceable security interest in the accounts. So here we didn't use the word because, but we used a lot of which means. which is basically the same thing. So you can see, though, that using those linking words made it very easy to write the analysis. All right, let's move on to the next rule. A financing statement must be filed in order to perfect the secured party's interest. Our analysis is that the finance company did not file a financing statement with respect to the transaction. So our conclusion is because the finance company did not file a financing statement, it is enforceable. Security interest in the accounts is unperfected. All right, our next issue is what kind of interest does the bank have in the accounts? The rule here, at least to start, is the same rule for assessing the finance company's interest. Now, the analysis is that the bank loaned the manufacturer money, which is value given. The parties signed a loan agreement which describes the collateral as all present and future accounts, which means that the debtor authenticated a security agreement with a description of the collateral. The bank filed a financing statement, which means that the interest is perfected. Now, if the manufacturer still has rights in the accounts that it sold to the finance company, the bank had a perfected security interest in the accounts. Now, we also have to cover another rule. When a debtor has sold an account, he still holds rights to the account as long as the buyer's security interest is unperfected. As determined previously, the finance company did not perfect its interest in the accounts. As a result, the manufacturer still has rights to the accounts that it sold to the finance company when it got a loan from the bank. This means that the second requirement for an enforceable security interest is satisfied. So our conclusion is the bank has a perfected security interest in the accounts. Now, which interest is superior? A perfected security interest has priority over a conflicting unperfected security interest, is our rule. So the analysis is the bank's security interest is perfected and the finance company's security interest is unperfected, so the bank's security interest takes priority. Do you see how easy that final portion is once you've done an effective job of analyzing the first two parts of the question? You don't have to spend a lot of time to make your point. Now on to question 2. The issue is whether the retail stores are obligated to pay the bank or if they can satisfy their debts by paying the manufacturer. Our rule is that when an account has been assigned, the account debtor may discharge its obligation by paying the assignor only until the account debtor receives authenticated notice of the assignment to the assignee. Here's our analysis. The bank sent a signed note to the retail stores, informing them of the assignment and directing them to pay the bank. As soon as the stores received notification of the assignment, they were no longer able to discharge their obligations by paying the manufacturer, though they could have requested reasonable proof of the assignment. So our conclusion is the retail stores must pay the bank. If they pay the manufacturer, it will not discharge their debt. And that is it. That's the end of the question. Now, it's important to note that analysis is one of the hardest and most important things that you've learned in law school, but it also means that you have had a lot of practice. Even if you get the rule wrong on a bar essay question, if you use your facts well and analyze effectively, you're still thinking and writing like a lawyer and may still be able to learn points and still be able to earn points. And with that, we are out of time. I want to take a second to remind you to check out our blog at barexamtoolbox.com, which is full of helpful tips to help you prepare and stay sane as you study for the bar exam. You can also find information on our website about our courses, tools, and one-on-one tutoring programs to support you as you study for the UBE or California bar exam. If you enjoyed this episode of the Bar Exam Toolbox podcast, please take a second to leave a review and rating on your favorite listening app. We'd really appreciate it. And be sure to subscribe so you don't miss anything. If you are still in law school, you might also like to check out our popular Law School Toolbox podcast as well. If you have any questions or comments, please don't hesitate to reach out to myself or Alison at lee@barexamtoolbox.com or allison@barexamtoolbox.com, or you can always contact us via our website contact form at barexamtoolbox.com. Thanks so much for listening, and we'll talk soon.